All right, welcome back. This is the last time we're going to speak to each other on this show today, but not today. Let's remember to stick around. Top of the hour, 1 Central, 2 Eastern. It's the Cow Guy Close. I want to see you there. We've got this is going to be a great show. I've got 3 great guests and super subjects to talk about. There's a lot going on, too, so some of these things write themselves, but you're going to love it. I'm already excited about it. That's 1 Central, 2 Eastern, the Cow Guy Close. Now, if for some reason there's an emergency and you get pulled away from the television, we're going to be on, they rebroadcast on the rural radio, Sirius XM channel 147. That's at 5 p.m. Central, 6 p.m. Eastern. And if for some reason you miss that and you're up in the middle of the night, doing whatever you got to do in the barn at 2 a.m., 2 a.m. Central, 3 a.m. Eastern in the morning, we also replay it on rural radio, Sirius XM channel 147. So you got 3 places to get the show, but see if you can get it on the television. That's the best one. We're having a good time, and we won an award, believe it or not. So that's we're doing well. 1 Central, 2 Eastern. Cow Guy Close. We'll see you there. All right, let's take a look at these markets, because these markets ultimately are going to be your money, and that's why you tuned in. That's going to be corn's. This is basically a big nothing burger. Quarter cent lower in July, 4.43 1/4 last. That's basically unchanged. We've had an 8 1/4 cent range, and we're 3 1/4 cents from the low of an 8 1/4 cent range. That'll give you an idea. But September and December are unchanged. Look at these. Well, it just clicked. It just ticked up to 1/4 cent better on the day. 4.63 is last there. That's 3 1/4 cents off the low of the day and 3.5 cents off the high. So we're right smack dab in the middle of the range there. So we can say corn's doing nothing. Let's move to soybeans and see what they're doing. They're a little easier. 4 cents in the front and 8 cents in the back. So we lose more real estate as we go out the deferreds. July's down 4 1/4 cents to 11.80 1/4. That's 4 1/4 cents off the low of the day and about 9 1/4 cents off the high. If you go out to the Novi, that's 8 cents lower. 11.55 3/4 is last. A penny and 3/4 off the low of the day. We're going to call it about 11.5 cents, 12 cents off the highs. So there you go. That's beans. Wheat in Chicago. The Chicago wheat market is lower as well by double digits. 11 3/4 cents lower in that July contract to 661. That's 2 3/4 cents from the low of the day, and 20 1/4 cents from the high. Ouch. All right. As you go out to the D's, that's down 10 1/4 cents to 708 1/4. And again, that's about 2 3/4 cents off the low of the day and 18 1/4 cents off the highs. Let's take a look at the hard red wheat in Kansas City. Hard red's down 10 cents a dime up front. 690's last there. 2 cents from the lows, 15 1/4 cents from the highs. East is down 9 1/4 cents to 723 1/2. That's 2.5 cents off the low of the day there. 14 1/2 cents from the high. That's hard red in Kansas City. Let's move over to the spring wheat in Minneapolis. That's 9 1/4 cents lower in that July. The 724 1/2. That's about a penny and 1/4 off the low of the day there. Well off the highs by 12 cents. If you go out to the D's, that's 8 3/4 cents lower to 750 1/2. A penny off the lows, 11 cents off the highs. And then finally, let's take a look at cotton, and we'll get to our guest analyst. 51 points better there to 73.66. That's July. 18 points lower to D. 73.17 is the price. All right, let's bring him in. That's Ted Seifried, Zaner Ag Hedge. He's in Chicago. Ted, you got about 2 minutes. Have at it.
Yeah, Scott, I mean, you said it. It kind of a nothing burger of a day for corn, sitting right at unchanged, right? But you're going to say, after 5 straight down days in corn, it's kind of disappointing we weren't able to hold on to that earlier strength. When you go back to the crop progress report that we saw yesterday afternoon after the close, while conditions came about a lot better than expected at 75% good to excellent, and trust me, there's a whole lot of people that want to argue that. I was at 68% good to excellent, so I was way off myself. I'll admit that. But I'm not sure the 75% good to excellent is an accurate representation. Either way, that's the number we have. That put pressure on the market early, but then the planting progress number being below expectations, I think gave us a little bit of strength, and we were stronger with that earlier in the day. Now we've traded both of those, and we're sitting near unchanged, which is sort of helping the oversold condition of the market. But the lack of any sort of bounce, any notable bounce after 5 straight down days is concerning. And when you look at a chart, it is a downside breakout to the downside. Downside breakout to the downside. It's a breakout to the downside, and yet we do still have, the yearly low below us. It's just really not a good look on a chart, especially with the drought monitor looking the way it is. The good excellent, the crop rated really very well. The forecast looks like we're going to have some windows in most places. Yes, there is still some concern about getting that last little bit of the acreage in. But man, it's a significant change in the market and the the technical outlook that we were looking at, just like 10 days ago. So, yeah. In the meantime, soybeans, had tried to bounce as well, being a little bit further behind than expected, but now we are under pressure once again. I guess the only interesting thing that we have to say about this is that we've continued on with this bull spreading on down moves. And to me, that suggests that we have a little bit of tightness in the cash market right now, as farmers are very unwilling to sell, especially in this lower prices. But the outlook for new crop, both December and November, is improving, which is why they're kind of leading the ways lower. Either way, bull spreading on a down day isn't very typical, but we've been doing that for about a week and a half.
All right, there's a lot to take in there, but yeah, all good stuff. I appreciate that. Great content. Stay right there, though. We need to hear what you want to say about the livestock. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge, about livestock next time. We'll be right back. All right, welcome back. Let's talk about some livestock prices, see what's going on over there, right? We'll see if we've got anything cooking in live cattle land. The answer is not really. We're 12 cents better in the June. 182.15 is last. That's just one tick off the low of the day there, though. And if you go out the deferreds, we lose anywhere between 22 to 45 cents. We're down 45 cents in August, right behind June. 178.42 is last, and that's just now 178.40. We're one tick off the low of the day. And we're working on a $2 range there, so that's kind of legit, actually. So live cattle trading weak going into the close. Feeder cattle, what do we got going on over there? Well, we've got a lower board by anywhere between 47 to 70 cents. 57 cents lower in the August, that's up front. 255.62 is last, one tick off the low of the day. Now we've just made a new low. We're 5 cents off. 5 cents off the low of the day. That's 255.60 last in August feeders. Go out to the Nove. That's down 60 cents to 258.20. And again, that's just one tick off the low of the day out there. And we've had a decent range, right? We've over $2, so that's what's going on in Nove feeder cattle. Let's move out to the lean hogs. We'll get back to our guest analyst. Lean hogs down 87 cents in the June contract. 92.77 is last there. Let's bring him in. 30 seconds left to Ted Seifried. Ted, take it away.
Man, I don't even want to. This is not a great day for the livestock as a whole. After cattle's sort of heroic comeback off of lows yesterday in order to close above some key support levels that we had broken earlier in the day yesterday, we have zero follow through to the upside today. Well, we tried, but now we're falling flat on our face and coming back down. This is not a good look on a chart. And don't look now, speaking of charts, what a big downside continuation of this breakout to the downside in the hogs. We are now trading the lowest levels since early January. It's been, after finding some strength Thursday and Friday of last week, the last 2 days have just been really not great for hogs. So where's the bottom? I mean, this is the question we're all going to be asking. Doesn't feel like we're quite there yet after today.
All right, appreciate it. We'll keep an eye out for that. Thank you very much, Ted. Ted Seifried, Zaner Ag Hedge. He's in Chicago. We're not. We're here in Nashville and Music Row. Back to you one more time.
Back to me. Last time, Cal Guy Close, of course, coming up at the top of the hour.